How you doing? This is Paul. We're at the camp. We're not at the camp where the log cabins are, but we are at the Camp Chewinwa, and we're out in the public. And I'm
in the
here
woods.
with my sister Mimi.
Hi.
And we're going to make a reservation on October 1st when the first day of reservations open it up. Until then, we're going to have a little lunch and send you a little message because it's still, it's quiet, and there's trees. So it's a wonderful day, nice and cool. Shade is appreciated because the sun's out and it's still summer. It's still September.
We don't have to wear hats.
We don't have to wear hats. We're hoping you'll volunteer to be one of the leaders to organize this year.
We would love that.
That would be good.
And we'll help out as any way that we can if you want to, design the weekend and be in charge and tell us what to do.
The campsite where we're going to stay with the log cabins and all is all rented up today. So we're doing this from the other campsite that's not rented. But we will have the log cabins again. I think there's 8 of them. I'll be sending out the price list and your reservations. We're going to reserve the whole campsite for now from Thursday through Sunday, and we'll look forward to seeing you when you get here. And if you tell us what days, we'll reserve a cabin first come, first serve, right?
That's right. First come, first serve. And first, if you just reserve it, we'll put your name on it.
That's right. I tried to push for $1,000 reserve, but Amy said that wouldn't work. But we're here. We're going to cut this short because we know you're busy too, but we love you.
Right.
I'm going to take a little scan of the trees just so you have a feel of where we are.
I do want to say that we never know what tomorrow's going to bring, and this time is such a special time. It is for me. I can't speak for anybody else, but it's the only time that we really get to spend, more than a few moments together and reconnecting. And so I really hope that everyone will be there.
If you have a child that wants to be on the organizational team, they can do that. I've invited Colby, who wants that first week, and it looks like everybody's going to do the first week in March, and I think I said October in the email, but it is March. And if you'd mark that on your calendar, 1st through the 4th, I believe, or 5th, whatever that is, and if you want to organize with us, we'll do a conference call or whatever to get that done. So you have a great day, maybe even a conference email, who knows. Looking for ideas for next year. Have a great day.
Thanks, can't wait.
2012 in March.
Yes.
Family gathering. I'm going to scan here. Little campfire, little house. That's the dining hall. Of course, the restroom. There's multiple restrooms. Okay, guys. Have a good day. Good morning. This is Paul Halter with your morning mortgage moment. Today we're going to talk about FHA, or the Federal Housing Administration program, and qualifying your borrower. Before you ever show the property, you have to get in and call and set an appointment either by the phone for your borrower to probably pre-qualify. Getting a call now, hope that's a pre-qualify, because that means to us we got a possibility of money coming. One of the programs we look at so strongly is FHA, where the borrower only has to have 3.5% of their own funds, or not even borrow funds, but a gift funds in the property, so they could get 100% of all the funds they need as a gift. They also can do 6% seller contribution towards closing cost. In a market like we're in today, sometimes it's not just price that'll sell a property, but terms. So if you can offer a property where the borrower has little or no cash out of pocket other than their down payment, that property is open to more people, because there's more people with 3.5% cash out of pocket rather than 6 or 6.5% when they have to pay their own closing cost, etc. So FHA pre-qualifying is a fixed rate. It also, at today's rates, is like a 29 on the front end or 42 or so on the back end in debts. But more importantly, FHA allows a little more liberal take on some of the credit scoring and history of credit. They have no real credit score requirements, so the market is actually dictating what you qualify a borrower at in terms of credit score. So FHA is a property that you want to look at. We have the FHA qualifying sheet, which allows you to run through the numbers if you'd like, but it also gives you some of the factors to guesstimate a payment for a borrower under FHA and some of the rules regarding down payment. So if you haven't requested this, call our office at 904-928-0113 and ask Diane to send it to you, or reply to this email and ask us to send you the FHA qualifying sheet. Diane at 904-928-0113. This is Paul Halter with your morning mortgage moment, talking about FHA financing and qualifying your borrower ahead of time. Thank you. Good morning. Paul Halter here with your morning mortgage moment. I'm going to take a few minutes and talk about VA financing this morning. Again, I hope you've got your coffee. I'm doing my travel mug this morning because I've got some activities outside the office after I finish this recording. You know, VA financing is something in our market in Northeast Florida. It's probably every borrower that has eligibility should review for the benefit to him. There's no down payment requirement, but in addition, if you do put a down payment down, you get a lesser funding fee. Not only that, but just recently, as of October 1st, you've got a reduction in the funding fee, and if you call our office and request or reply to this email and request the mortgage aid, it'll give you those new figures. But today we're going to talk about qualifying the borrower before they go look at property, and let's determine if they are eligible for VA. We go ahead and request their certificate of eligibility, get that out of line, we do it for them, we set up their application, and then we run what's called ratios. VA has the benefit of allowing ratios to reach a little in excess of 41% for a borrower that has good credit, and it can be a total housing ratio. Sometimes today we're finding some borrowers have to split income and they can't use one of the borrower's income or the other for various reasons. VA allows us to go all up on, if you have no bills, spend all your ratios 41% on your housing, which if you have $2,000 a month, you can qualify for about almost $1,000 a month in payments, even with as little as $2,000, a little over $2,000 a month in income. So the bottom line is VA allows you to expand or stretch your home payment qualifying if you have no other bills. If you do have other bills, traditionally it takes off the 41% your monthly bills. So this can get confusing. We have a sheet called VA Qualifying that we'll send you. If you contact our office at 928-0113, Diane will send that to you. Or you can reply to this, send easy qualifying sheet, and we'll send it out to you. VA financing in our area is a benefit that we're so proud to offer to our veterans, and we're proud of their service to our country. Anything we can do to make their lives better, we want to do. So this is Paul Halter with your morning mortgage moment, signing off. Call for your VA qualifying sheet. Hello, this is Paul Halter with your morning mortgage tip. I hope you've got your coffee and can take a minute to go through the tip of the day. We're going to talk today about conventional income qualifying. All your borrowers you're now sending out before you ever write an offer to get qualified for a loan to make sure they choose the best loan choice. And we've got more choices today than we've had in a while. You probably, I know for me, I'm closing my first 95% conventional loan in a while with mortgage insurance, and it's a lot cheaper for this borrower to do that than do the FHA or VA product. They particularly are buying a home that they're buying something like $50,000 under what the current appraisal is on that property. So while they have 95% financing and they ran through one of the qualifying sheets with both their incomes. They currently have a townhouse they can't sell for what they feel like they want to get out of it. So they're going to keep that and rent it. We can't use the rental income in the qualifying, but the fact is that with the payoff of a couple of debts, they qualify for 95% financing on the new house. In approximately 2 or 3 years, they may be eligible to seek a reset of PMI based on 98% or 78% of the current market value or 80% of the current market value and drop their monthly fee entirely. So for them, a 95% loan carries the possibility of dropping mortgage insurance and not having to pay that monthly fee, which is a pretty substantial savings. It also allowed them to get a gift from a family member of all of the cash needed for the transaction, except for 3% that I had to document of their own cash income or reserves to pay for towards the down payment that PMI required. So the fact is that conventional financing is in the marketplace and live for you to use for your clients, and it certainly is one of those things that you want your borrower to review. If they have strong credit and the right income numbers to hit the ratios on a conventional loan, you would hope your lender takes that option as a possibility. So this is Paul Halter with Home Source Lending, a ResMac company, talking to you about conventional financing and the wisdom of at least looking at that in your pre-qualifying prior to ever going out and looking at your home. You have a great day. Call our office for your qualifying gross income method for conventional loans. That's something you can do some quick calculations on to qualify a borrower on your own in case you can't reach me or our office. Although we are available through our cell phone at 904-349-1200. So call Diane at 928-0113 and request your conventional qualifying sheet, or reply to this and say conventional qualifying sheet and we'll send it out to you. Have a good day. Good morning. This is Paul Halter. I'm here with your mortgage morning moment. Talking to you again for the last day actually about your mortgage aid. That's a document here that we've made up that has all of the factors and the loan amounts, etc., on all the products pretty much that we offer today in this market. Your fixed rate conventional 30-year and 15-year factors are also found when you figure payments, and this mortgage sheet shows you how to do that. For instance, at 4% today, it's $4.77. You can borrow $100,000 at $477 a month. We actually are doing a loan today at 3.875. So the market is really attractive. The more normal market for $100,000 is 7%, is more like $665. You know, that's a pretty big difference from 477. So it's time to get out and sell some houses. It's time to use these factor sheets. In addition to the products that we've been running over every week, it tells you how to figure your millage rates on taxes. You know, taxes is an interesting topic in this market because the tax assessor's office, if you haven't talked to them, used to set the taxes always based on the sales price times 92%. Less the homestead, which right now is $50,000 for some things and $25,000 for others. It amounts to about $35,000 combined off the 92%. That gives you your homestead value times the millage rate that the taxes are set every year. You know that in this market we've got some properties that aren't sold to the market as a market property. It's more sold at a foreclosure sale. Those properties become what we call non-market sales. They aren't arm's length transactions. They have lesser values typically, and the assessor doesn't assess the value like they do on a purchase of a seller's property where the deed has not been transferred through foreclosure. So they go out into the marketplace, take the average sale in that particular market and take that property value times 92% less the homestead times the millage rate. So taxes are figured a little differently, but the fact is all the millage rates for each tax district that we have in Northeast Florida is on this tip sheet. There's another product we didn't spend a lot of time talking about, USDA, that's on here for the rural counties. All of your factors for FHA mortgage insurance that changed a little bit, and VA funding fee that actually went down a little bit or updated on this form as of October 1. Your recording fee, stamps on the note, attorney's fee, even the cost of appraisal. So do yourself a favor, have this tip sheet at your hands when you're drawing up offers or doing cost sheets for properties, because this gives you all the details for which to do that with. Diane at 904-928-0113, 904-928-0113, or reply request Home Source Mortgage Aid. You can call her and get it, or you can reply by email and get it, or stop by our office and pick it up. In addition, we still have some of those 2 microfiber cloths that you can put on the side of your seat and prevent things from falling between the seat, like your phone, etc. It also gives you a nice cloth to dust or wipe the water off if it rains. So this is Paul Halter with your Morning Mortgage Moment. Have a great day. This is the last you'll hear about our tips for a while, or the interest rate factor chart that we'll give you. You have a good day. Good morning. It's Paul Halter with Home Source, a ResMac company, with your Morning Mortgage Moment. Wanted to talk about USDA financing today in rural counties around Duval County. Not really available in Duval County, but if you're in St. John's, Baker, Nassau, or any of those smaller rural counties, most of the areas, Clay County, most of those areas have most of the area as USDA eligible. That's basically 100% loan. You've got some limited qualifying with incomes under like $55,000 or so. Have to go on site and kind of qualify every individual. You also, so there's property location qualifying, and there's also income qualifying. There's my phone. This is a short message. You've got Paul Halter with Home Source Lending, a ResMac company, at 904-928-0113. Call Diane and get your mortgage tips, your mortgage aid, and get the USDA information on there, as well as the other items covered this week. This is Paul Halter. Call Diane, 904-928-0113. Thank you. Good morning. It's Paul Halter with Home Source, a ResMac company, bringing you your Morning Mortgage Moment. Not going to take much time today, but I want to talk again and continuation on your Home Source Mortgage Aid. And it's basically a sheet that gives you details on how to write contracts and do products in this marketplace. Yesterday we talked about FHA and how attractive that assumable fixed rate, 96.5% loan to value, only 3.5% down product is. Today we want to talk about another product called VA. In Northeast Florida, where we're located, there's a lot of veterans that are both active duty or retired. We had 3 bases here, now 2, and we're on the brink of Georgia, which has the VA sub-base. So we're a popular place for veterans to retire and make their home. VA is 100% loan to value, again at an assumable fixed rate. Today at the 4% rate, what an attractive product to take into the marketplace of the future. VA is easier qualifying. It has a funding fee that just has been reduced, and you'll want to have the aid sheet to give you those numbers so you can calculate that funding fee correctly on your VA loans. Home Source Lending has been doing veterans loans for a long time. We appreciate the service of our veterans, and I'm a veteran myself, so I understand the sacrifices to some degree that some of our military are taking. So let's serve them together. Get your details from your mortgage aid. Call Diane at 904-928-0113. 904-928-0113, and ask her for your mortgage aid. And don't forget to ask for your microfiber cloths and come by and pick those up. Have a great day. Good morning. Paul Halter with HomeSource Lending, a ResMac company. It's good to be with you again. I hope you got your coffee and you're settling into the day. I'm here to talk to you again on our mortgage aid. It has the details of the products you'll need for writing offers and to serving your clients today. So I hope you'll call our office and request your mortgage aid. Today we're going to talk about conventional financing. We have already talked about FHA, which is 3.5% assumable fixed rate loan with a 3.5% down payment. We talked about VA that has 100% lending capacity with no down payment. And it also is an assumable loan serving many of our veterans locally. We now talk about a conventional loan that is 95% and in some cases even 97%. Requires a little bit higher credit scores, a little bit different underwriting guidelines, but basically a product we have available in our market today and are thankful for. Those limits go all the way up to $417,000 on a 1 unit, and they do 2 and 3 and 4 units as well. You can take a conventional loan without paying anyone to insure the loan. Unlike FHA or VA, there's no mortgage insurance cost if you put the 20% down required down payment. What an attractive product. That product is available in Jacksonville, and it carries mortgage insurance when it's above 80%, and those factors are on the mortgage aid, so you can calculate those numbers. So in your principal and interest payment, you have not only your taxes and your insurance, but you also have your mortgage insurance. In this segment, you also could request a copy of, I don't know if you have done this in your career, but I've been at this thing for about 30, 40 years now, in exact 1971, but the interest rate factor chart that we offer free of charge goes along with the mortgage aid, and you can see exactly what 4% cost you per thousand per month. It has the principal and interest factors all the way up to the more normal 7 or 8% factor. So take that, look at it, and see what attractive market we're in, and how buying a home in this market, not only with the attractive sales prices so far below the market that we've had in the last 4 or 5, 6 years, but you have tremendous financing opportunities. So conventional financing is available up to $417,000. You can do 2, 3, or 4 units and get larger loan amounts all the way up to $800,000. All of that is available up to 95% financing. So call us at 904-928 for your aid and help us get more people in homes with this conventional mortgage product. You're Paul Halter with HomeSource Lending, a ResMac company, signing off. Good morning. This is Paul Halter with your morning mortgage moment with HomeSource Lending, a ResMac company. Good morning. I'm here with my coffee and got my jacket on. It's October, first day of work week. Got a full cup, kind of like the work week this week is a full week. It's a new month. We're building new business for the new month and closing out what we didn't close out last month. Today I'm here to talk to you about our mortgage aid. It's a form that we created. It's called the HomeSource Lending, a DBA of ResMac Mortgage Aid for you. It's basically got the things you need in this business to do business. Some things are changing, and as usual, you got to embrace change to know what they are. Effective October 1st, FHA is the first product we're going to talk about this week, and FHA has a lower loan amount than it had in the past. Again, because of the change in prices, this probably isn't a big impact, and the fact that we have 95% conventional financing back in our marketplace again is the plus side of that for the bigger loans up to the Fannie Mae limit of $417,000. But FHA will go up to $304,750, and then you've got your 2-unit, 3-unit, and 4-unit properties. It's amazing that you can borrow 96.5% of any purchase that you make in this market. What a deal. Not only that, but FHA you'll find is an assumable product at the rate in which your borrower takes out the mortgage. So today, if you get a 4% fixed rate for 30 years, and that's an assumable rate, 5 years from now, when rates are more like the normal 7 or 8%, he's going to be selling a home with an interest rate at half the market at that time. What an attractive product to use in the marketplace. You know, my call to action today is call today to talk to Diane, confirm your microfiber cloths that I talked about on Saturday, and also request your mortgage aid. This little product that we'll be talking about all week long, so you can go along with me on that product and check out the terms of FHA and how it's changed, so you make sure you write those contracts correctly. Have a great day. It's the new month in the new calendar, and October is going to be a great month. Have a good day. Hello. You've reached Paul Halter with Home Source Lending, a ResMac company, bringing you your morning mortgage moment. We're going to do a little promo on just a consumer tip. A friend of mine, Ramona, did this on her video to her customers, and I thought this would be something that would benefit you. So we're going to have a special on this particular video today. She told me about taking some little cloths that are those cloths that dust everything really easy. I forget, micro cloths or something like that. But, you know, she said I could take that and put it in the crevice between my seat and the middle and never lose those things like your phone or whatever down there. It would stop that. And she said, you know, when it rains and you get in and everything's a little wet, this little cloth is something you can pull up and wipe. And if you're like me and you drink coffee every now and then, or you eat in the car, you know, this little cloth can easily put on your clothes and keep you from getting those ugly spots. Bottom line is, the cloth in the middle of the seat, we're going to give away 2 of those to every one of our customers that call our office at 928-0113 and ask Diane, our administrative assistant, to put their name down for reserving the cloths. We'll do that to 10 customers, so call today at 904-928-0113 and get your free cloths for your car, and don't ever lose anything between the seats. Watch this week, we're going to do our consumer tips on the mortgage aid. You know, FHA's raised their loan or changed their loan limits a little bit. FHA's changed some of their cost of mortgage insurance. Conventional mortgage insurance changed. Some of our taxes are changing in our municipalities. Some of our VA funding fee went down. So we've sent out a new sheet. I want to go over that as we go through this week, so we'll take one product a day. So watch for our mortgage aid tips this week. You have a great day, and thank you for listening this morning. Paul Halter with Home Source, your ResMac company.